And so if you had stayed invested from early 2000s through the bottom of the market in 2009 all the way to today, your annualized return, if you just bought the S&P 500 and held it, did nothing else to it, your annual return would be about 10%, a little better than 10%. If you had stayed in cash for 1 year, so through all of 2008 and part of 2009, and you were waiting for confirmation that the market was actually going to come back and it wasn't like a sucker's rally or something like that, your annual return would have been about 7%. And if you had just stayed in cash and never reinvested, your return is negative. So if we pull back to more recent, because it's easier to kind of wrap our heads around, and this is staying invested through the volatility of 2020. So again, had you bought the S&P 500 and held on, your annualized return since then would be 12.96, almost 13%. If you had stayed in cash for just 1 month, so let's say that you sold your stocks in March of 2020, and hopefully you timed it at the beginning of the month before the market really started to fall, and you stayed in cash in April of 2020 and you waited until May to get back in, your rate of return would be about 1.5 points lower, so 11.4 or so. But if you're still sitting in cash and you sold during the pandemic, your rate of return is 4.8%. Now, the reason why that's not worse is because of where interest rates are today. So for the past year and a half, almost 2 years now, cash has been yielding a much higher rate of an annual percentage of yield, I should say, than it has in the past. And so if you've been sitting in cash or money markets, you've made a decent amount of money over time because cash is paying well. And as long as the Fed keeps rates high, cash is going to continue to pay well. So you're really kind of the same thing with the stock markets. You're really just, as long as you stay invested, it'll earn over time. But what we know to be true is that cash is not a very good long-term investment because the rates of return do not generate enough return to be able to support your later lifestyle or your retirement goals.